Good morning, everyone, and welcome to Nadex Morning Analysis. It is Tuesday, September 28th. I am Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. There are some hot spots in the markets today, so we do have a bit to cover. I also want to remind everyone that at noon today, there's going to be a full-blown hour-long session that will cover everything and in much more depth. But let's get at it today for this morning, at least to get us ready for the open. Before we get there, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And lastly, this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So I did mention there is quite a bit to be talking about this morning. We are going to start off with the pound. The pound is seeing tremendous weakness here. You can actually see what's going on against the euro. We will also jump over and take a peek at what the pound is doing against the dollar. There we go. And you can see it's the exact inverse of that, right? Because the pound's in the first position. So tremendous pound weakness. I mean, holy cow, we've already blown through all of the binary options here, and we're gonna have to add some more strikes. So that's number one. Number two, we're gonna talk about the energies. Energies are taking off. Oil took off. Yesterday we were making jokes about how Brian's gonna have to pay 650 for his nat gas, and it actually got pretty darn close to it. I mean, holy cow, nat gas is just taking off. Now, we are seeing yields. We're seeing yields this morning. This is the story of the day: is bond yields are going up, which means bond prices are going down. That is what's driving a lot of what's going on in energy, particularly in the metals. Gold and silver bottoming out. So we're seeing metals go down, and because bond prices are going down and yields are going up, people are moving money out of equities and taking some of the. I think that the 10-year Treasury went over 1.5%, and we haven't seen that in a while. So things are moving around this morning with yields up, energy's taking off, metals are sinking, the pound is getting hammered, and then we're seeing equities, particularly the Nasdaq. Pretty big into the red. So we've got a lot to cover. Let's cover it this morning. And then again, I want to remind you, I'm going to drop into the chat the link for the full-blown session. And between now and then, Powell is going to be testifying at Congress. He testifies at 10 a.m. So it will be interesting. I think people are expecting Powell to say that he expects the inflation that he said that was transitory to be around longer than he originally had thought, but that it is going to be around a little bit longer. And then who knows what questions are going to come at him from Congress. So it's going to be an interesting morning. Again, I want to remind you, come back. We're going to talk about this now, and then we'll be back at noon after Powell starts testifying, where we can do a little bit more analysis based on how the markets start digesting that. So, Brian, I'm going to flip it over to you, and let's start with the pound to begin with, because that's quite a
Yeah.
move.
Yeah, so the pound has had it's been actually kind of been a rough year for the pound in general. I mean, they started off the year with Brexit. Everybody knew they were going to take a step back. The recovery looked great. Again, one nation versus many. They've had some good things and some bad things happen with COVID, but the recovery is starting to slow. And yesterday we heard some news and basically slightly dovish comments. They weren't too bad. And you can see this is on Daily Effects. You can click the top article about, the pound breakdown, risk heightened on US dollar change. And in general, it's nice to say that it's the dollar, but in reality, if you look at the charts, that's not the story. But things that they're mentioning is that they've seen a rate of recovery that's slowed in recent months. Again, not good. Everybody else seems to be picking up. We're also mentioning the fact that current supply chain issues have been broadening out, in which tightening monetary policy, which that's what tapering and everything and raising interest rates is, to supply shocks could make the situation work by adding pressure on a slowing recovery. So, again, not positive news. Looking at kind of the different pairs out there, here's the pound dollar. The reason why I say this is it's not a dollar story. It's nice to look at this and say, hey, this is the dollar. It's not the dollar, because looking across at the pound, the euro pound, you can see that really since the session opened, and again, this is why we talk about how session opens are so important. Here is the session open, and it is going straight up, right? We are now at officially 105 pips. If you look at the daily ATR, Oops, I lost it up top. Where is it? It's so confused. The daily ATR, even with today's burst, is only 42. So we are over 2 times what the daily ATR is in this pair. So it's one of those things you can say, is it dollar related? No, because this is the euro pound. So it's purely a pound based play today. Now, the nice thing about a big move like this is this is what would be called a parabolic move. It is obviously well beyond what is expected, what the average is. Again, Todd mentioned that there's no prices left because it is so far outside of what the average is, and typically the market plays averages. So unfortunately, in things like the euro pound, we really don't have a zone up until 86.41. We're kind of getting close, but again, there's going to be some profit taking coming in. This was kind of like a 1-2 punch, particularly against the euro, because Lagarde also had some comments in there that were positive for the euro. But the pound dollar, obviously, because the pound is down in the first place, it's going the other direction. It was heading straight down. There was actually a little zone on the 30-minute right at the open. Again, we talked yesterday about, again, we'd like this zone 137.46 would have been great if we were there at the open. I liked it for that. Unfortunately, it didn't get up there. It only pulled down to this level. And then here's the open, and it collapsed through the bottom. And again, this is more or less the UK market being able to react to the comments that were made yesterday. Now you can see it came down. We were talking about 136. It had been hit a few times. It based there and sliced through, but now it is pushed all the way down. And again, this was an absolutely enormous move. This was 188 pips in the pound dollar. Okay. ATR on that one is also now skewed. The ATR on that one is 89. So again, quite a bit more than what its average is per day. Hitting a zone, especially on the higher time frames, tends to be where reversals are coming into play. So question is now coming in, we are getting close down to a level. Is it time to start looking for reversal plays down at 135.28? We do have Powell speaking today at 10 o'clock. That could give some dollar strength in there, particularly if it's a hawkish comment. But remember, Powell's track record is more on the dovish side of things. And if you heard some of the news that we saw yesterday, and again, in the day of speeches with Williams and Bernard and everybody speaking, they're talking about raising interest rates, and Bullard says there's going to be 2 next year. But for the most part, everything else kind of seemed like it was a bit dovish. They were talking about comments of, it's not going to be out of what we expected. It's going to be lower than targets, and they've made some comments now where it's kind of like, are they going to stay dovish even longer? Like, we don't want to hurt the economy. It's not quite as good as everybody is making out to be. So again, those comments being weak dollar, that would give the profit taking, all the people that are involved with this kind of sell off, they have to they have to buy back their positions at some point. Right. That could provide a turning opportunity. So there is one, if you're, this is a saying, do you want to catch a falling knife? Because that's basically what this is. But also pound yen is doing the same thing. But pound yen has an area, again, we just kind of hit it and we're bouncing. We actually put this little Harry Potter in yesterday. It is a level. It's been touched twice. This is hit number 3. So could it bounce from here? Yeah, it could, and it would be the profit taking. But again, if we get some yen strength in here to help continue to push this lower, we did have a break below 150.94 that we were shooting for. I mean, in reality, it could come all the way down to really 150.31 before we run into buyers on the opposite side. It's a pretty nice little racetrack over there that we could grab. So
Yep.
Again, if you want to stay with the trend, jump in, but it's always kind of a little bit riskier. Wait for a base and a pullback before you just jump in. Pound dollar is looking for a reversal area right now, as well as the euro pound's got a little bit more to go before it runs into an area of sellers as well. So
I was going to say on the pound dollar, and this is at Nadex. We of course we got those binary options, and as we mentioned, some of those shorter duration binary options, we've actually blown through all the strikes, and you're going to have to look at different durations. But the other thing that you might want to consider are some of the other products like a knockout, and again, you'll have to take a peek at where these knockout levels are. But there could be, if you start to see a reversal, could you look at one of these knockouts and that your risk is limited if it touches? I mean, it wouldn't be that great if you went long one of these knockouts and it hit the floor, knocked you out, and then turned around and took off, and you said, "Oh, look at that." But it is something to be considering in situations like this where you might look for a reversal, something to retrace. At some point, the knockouts might be an interesting way to play this versus a binary option. And to top it off, remember, you do not have to wait until expiration to see what happens. If you got into a knockout and it did actually go your way, you could choose to exit the position early and take a partial profit Again, so it's a different way to potentially play a move that gets like this is to check out some of those other products like the call spreads and the knockouts, but the knockouts are kind of looking like they're in an interesting area where it might be compelling if we do see. I mean, it's trying to turn right now, but who knows? I mean, it could continue to go lower, but just keep an eye on it. And if you see it turning and you think it's an interesting trade, that's another way to potentially play that.
Yeah, I mean, and again, we got about 30 minutes before the true US trader comes in online. So we gotta kind of stomach this initial charge here is what we really
Yeah,
need to
you
get
got you
through.
got to tread lightly, right? Tread lightly,
Yeah.
but then if you see it changing and you decide, that that's something that would be an interesting way. If you're looking for that reversal, looking for those people to potentially come in and take those profits, that's
Mm.
one way to do it.
Yep. Yeah, that's one. All right. What do you want to cover next?
Oh,
Was
so you know what? So that was we covered the pound, all the pound
mhm,
weakness. Let's jump into energies quickly.
sure.
Because oil and then particularly nat gas. I know it's a sore subject for you.
Not yet. The good thing is lumber prices went down, so I'll just do
Just to
lumber.
burn
It's
wood
easy.
instead. There
Yeah,
you
just
go.
wood burning stove. I mean, I don't know if it's I don't know, maybe. No, I don't think it's more environmentally friendly. Anyway, OPEC came out with
I don't
their
know.
speech today. According to OPEC, this is the late breaking news. Their projections are that global oil demand will plateau after 2035. How they could
Thanks.
project that by 2035, I have no idea. I'm pretty sure Elon Musk is laughing somewhere when he saw this comment. He's like, "Yeah, good luck." And I'm pretty sure. I mean, if you think about it, we mentioned it yesterday. China has said the inflation in particularly in energies and in oil is getting out of hand. So now the United States, I know the United States is all they're all on board. Biden hates oil, so he's like, yeah, let's make it so expensive nobody will want to use it. China's kind of saying that it's ridiculous now, and again, I think what it'll do is this will drive it towards other things. So I don't know where they get these projections from, but this is the news that we've had from them today. They're saying, if we don't have sufficient oil investment, is not undertaken, there's a risk of future instability and supply shortages. I don't know if OPEC is like, hey, listen, Biden, you idiot, you canceled the pipeline, and now this is what you have to pay the price. Now, I don't know what they're trying
Right.
to say with this one, right? But there is not going to be significant oil sector investment undertaken ever again, I don't believe. The entire world is kind of anti. They're all about climate change and new opportunities. And
I mean, there is infrastructure in place. It's just that we're not going to put new
yeah, I mean,
infrastructure in place.
no, they're not going to. I mean, we're not going to, like I said, I mean, the technologies are out there. I mean, we can start, there are definitely things we can do to get more oil, but I don't know. This is OPEC trying to be like, yep, this is OPEC. It's kind of like the, what's it called? The Napoleon syndrome. It's kind of the what? The little Chihuahua that thinks he's a Great Dane is kind of what I think their statements are. So,
Right.
it's, in 2030, demand will average about this. It's like, no, I mean, 2030, I believe most of the mandates in the United States happen in the next 4 years. I think 2025, they all have to be in. And honestly, if you think about where we are, I mean, every Costco, every Sam's Club, where I live in Maryland, we're seeing the energy. You can't call them pumps because you're not pumping anything, but the energy stations, they're everywhere, right? They're
Yeah.
everywhere. So it's kind of one of those things that it's really hard to say that, oh, we're going to go up for the next 10 years. It's like, I really don't feel like that's going to be the case. Like,
Yeah. How do they?
I don't
So
know.
yeah, let's take a quick peek at the oil
Yeah,
and
I mean, here's the
Nadex
level.
charts.
Yesterday we
Right.
mentioned that this 7670-ish level between 7654 and
It
7686
did
was a
get
level.
there.
You can see it did at 2 o'clock this morning. Again, session open. We always talk about how session opens are really some of the best times, particularly the European one. There's the move. I mean, it's kind of stalling right now. And again, the U.S. typically likes to drive oil higher. If you look at, really where that session occurred, it's 3 for here down to, to 830. I would say it's on the smaller side. It wasn't a huge mover. Yesterday you can see that it basically just went sideways in that time frame, right? Excuse me, it was a big little situation. This is a little bit more, not quite as much as yesterday. And the API data comes out later on today. So I would say right now, oil's in a tricky situation. I don't think anybody's listening to OPEC. Nobody cares what's going to happen in 2035. It's way too far away. And I believe that Nostradamus has predicted the world ending 6 times from now till then. So it won't necessarily matter anyway. So eventually he
Yeah.
will get one right. But here was the short that we talked about. You're 2-1. Be cautious. The U.S. session is coming online right now, starting to come online. So again, it's pulling back a little bit, but you're already over 1-2. So had you taken this in the overnight, you're looking pretty good right now. I would say that's probably a decent area to kind of roll from. Like I said, with the prices going higher. Now, natural gas is definitely pulling back.
Oh, yeah.
When I logged in this morning, it was up 7%. It's only up 4% now, so it is crashing back down again.
So there is volatility.
$6.30.
Yeah, this is. I mean, this is crazy volatility. What's going on?
In all honesty, what I believe right now is I think that natural gas is becoming the target of kind of like the Reddit trader, the same way that silver became the target for gold. It's kind of like, oh no, this is what it is. Like, it's the anti-Wall Street trade. There's not really a whole lot that can justify the price of natural gas moving. It's not one of those resources that we're at risk. We don't bring it in from other countries. We don't need it. They're talking about shortages, but that's shortages on more like the other side of it. So it's kind of one of those things that there's really nothing justifying this price move up. I mean, again, I don't know what the Farmer's Almanac says if it's supposed to be bad, but right now it's one of those things that it's not. There's nothing that really justifies it. Now you can see it's only up 2.7%. So it's really starting to come back down rather fast today.
Yeah, it does create opportunity. You'll have to just check out those. I mean, this when things are moving this quickly in this short a period of time, this is where the binary options get kind of interesting and a little bit more compelling because they do have much more limited risk, and you can control and define your risk a little bit.
And again, the way to play this, guys, is typically, again, when you have something that is this volatile, drop down to the shorter duration contracts, stay away from knockouts, because again, it's a bit too volatile for that. But again, if it's coming up to an area where you're like, listen, sellers stepped in, and this is one of those easy things to do. You can say, all right, well, listen, I know around 8 o'clock is when we had the U.S. trader stepping in. Here was one late last night, and there was sellers coming in, right? We had sellers coming in right there at that same level. So if we take a horizontal line and go across, you can say, hey, listen, just happens to be at 8 o'clock. There's an 8 to 10, those are 8 to 10 contracts. You could try call spreads because they tend to be a little bit cheaper. And again, you start seeing a little red base there. You can say, all right, this could be the opportunity to take something on the shorter time frame, knowing that volatility is about to increase. Look for a short trade in that direction. So again, you're out now. I don't know what it looked like. I didn't trade it. But those are some of the opportunities where you can say, hey, listen, I don't have a crystal ball, but I know that sellers stopped this before and kind of put in a new kind of trend. And then we rally back up in the European session. And all we did was roll back down again, and we're lower than we were. So, remember, oil and natural gas, not so much natural gas, but oil in particular, it's demand-driven. Recovery looks great, oil goes higher. Recovery does not look so great, it starts to go down, but then they're like, no, we got supply shortages.
Right.
Supply shortages. Like, there's always some news to prop oil up. There's like an excuse for it at all times. So, natural gas, again, I feel that natural gas is the Reddit of the energy sector right now. Again, like Dogecoin. Is it a big one? No, but it's the one that Reddit went to because that's going to be the new one that goes to $1 million per coin.
It does create just volatility and something to take a look at.
Yeah.
I know we're running out of time here this morning. I was just going to point out, we also know as interest rates are going up, we're seeing gold down. And I think during the full-blown session, we could probably spend a little bit more time going over the gold and the silver chart because silver started to rally some, but now it's just going down with gold as well. And that makes sense in as much as if you store precious metals, it costs you money, and if interest rates go up, it's simply going to cost you more money. Or opportunity costs lost if you could put your money in, say, a 10-year note and collect 1.5%, and you get nothing if you're holding precious metals. But I do want to jump over to the Nasdaq before we wrap up this morning session, and let's take a look at what's going on in the equities because that is causing some volatility over there in the equities.
It is the biggest one. And again, you talk about big sessions there. When we came back up, we were talking about this yesterday about breaking through this level, coming at 15,200. Right there that's the European session. So again, the Europeans also drove this market to the downside. Remember, the Europeans are big players, even in the U.S. market. They're not as into kind of individual stocks as we are, but they are definitely followers of the overall market and kind of where it pushes. Again, it's purely a bond and a yield play. Okay, as Todd mentioned. as bond rates go up, more people want to put their money there. Trust me, right now they haven't been able to get anything but CDs or anything like. There's no interest rates, right? There's no way to make money. But when bond yields go up, it's a great opportunity to be able to, it's a great opportunity to buy them. And again, it has that inverse relationship. When you can get more money in a bond that is guaranteed versus the stock market is very, very high right now. Bond rates are going higher. It's like, okay, if I can lock myself in to guarantee myself that return, it's time to take yourself away from the risk, which again, we all know the risk is coming, to put it back on the secure side of things. That's what happens. When this market is good, you want to get into it. As it comes down, you find somewhere else to put your money. And when this one goes down, this one goes up. And again, this is the bond and stock. So that's why we're seeing a lot of movement today. I'd be very, very cautious with the open. Go to those 15-minute charts, see if there's any quick setups, but be very cautious because 30 minutes later, Powell is testifying. And again, could he say something a little crazy? Probably. Is one of the senators out there going to ask him something to kind of stick it to them? Yes. Yes. And it's just kind of, what is he going to be prepared for that kind of comment? Particularly with everything that happened yesterday with the vote and the ceiling and everything else, it's absolutely going to come down and they're going to find somebody to blame. And
it will
be surprised today.
It is going to be an interesting session with Powell speaking in just over an hour. So listen, we've got a full-blown session at noon today. So with that, any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian, please email Brian, support@keeptradingsimple.com. And again, we did go over quite a bit because a lot's happening with yields going up. Again, that 10-year is above 1.5%. We are seeing metals down. We are seeing the NASDAQ equities down, but more so the NASDAQ leading the stock market lower. That pound is weak, and
all the cryptos are down too, guys. There. And it's not just remember, people are going away from risk to go into bonds. All the cryptos are down as well, almost about 0.75% too. So again, it's taking money out of risky assets, putting them into secure assets is what's happening today.
And that's what we're seeing that happen all over the place. And then of course we have energy prices, oil higher. We had nat gas through the roof and doing a complete retracement. So nat gas definitely a hot spot where things are moving around. Please, I dropped the link in if you'd like to catch a full-blown hour-long session today, and we ran a little longer this morning. It's going to be at noon Eastern, and everything will be covered, and we'll be able to digest a little bit more of what's going on after Powell starts testifying. So hopefully we will catch you there. Otherwise, we will catch you tomorrow morning. Good luck in the markets, everyone.